With mortgage rates stabilizing and inventory up almost 72% in the year, 2025 is shaping up to be a pivotal year for Sonoma County real estate. While the luxury market now has over 10 months of inventory built up, homes under $2 million, there's still less than 60 days worth of inventory. Now, this market shift presents a unique opportunity for buyers and sellers alike. So let me explain what that means for your plans this year. I'm Jonathan Burrington, half of Burrington Hargreaves, and today we're going to go through 2024 stats and what it means for 2025 in Sonoma County real estate market. It's that time of year when everybody becomes a market forecaster, and I'm no different. But before we dive into all the details, let's take a moment to see how the major real estate platforms did with their predictions, because everybody loves to quote Zillow, Redfin, and other high quality sources, or at least well known. I've got to tell you, they were surprisingly spot on, so let's break it down. Take interest rates, for example. Redfin predicted rates would hover around 7% in Q1 of 2024 before declining to the mid-sixes. And you know what? They pretty much nailed it. While it's been a bumpy road, their forecast is more or less held accurate. Right now, we're right around 7% on rates. While the Fed has made some cuts, the bond yields have actually tended to go upwards because of fears of renewed inflation, so they hovered right around 7% still. Now, let's talk about sales volume. Both Redfin and Zillow forecasted increases of 5% and 2.3% respectively. Now, while in Sonoma County, we came in right at 3.3%, which is a pretty solid year-over-year gain. And trust me, in this real estate world, this shows remarkable market stability given all that's been going on to see number of home sales actually increasing still year over year, albeit modestly. Higher rates did impact affordability and inventory levels affected our sales prices. Now, the luxury market dragged down the overall numbers, but the silver lining in all of this is that we still outperformed 2023. And what about home prices? Now, both platforms predicted slight decreases. Redfin suggested a -1%, Zillow 0.2% to the negative. But prices continued their upward march, albeit modestly. Now, Sonoma County home prices were up a modest 0.1%, so effectively flat, but not trending downward as projected. They basically pulled out their crystal ball and were pretty close to being accurate. But what does that mean in 2025? Well, that's where it gets really interesting, obviously, because that's what you want to know. What does the future have to hold? But first, let's break down the numbers in Sonoma County specifically. Now, I know what you're thinking. A 3.3% increase in sales volume and prices that more or less seem to be holding flat sound like a pretty quiet market. But let me tell you something. This headline number masks a fascinating story of a big market divergence that could signal some incredible opportunities for both buyers and sellers in 2025. The most significant shift this year? The welcome return of inventory. And when I say welcome, I mean it. New listings jumped 8.7% year over year, with a stunning 72% increase in inventory due to homes staying on the market longer, and also the luxury market led this charge, with a 15.6% increase in new listings above $2 million. These aren't just old numbers, folks. This is the most inventory we've had since 2020, with the biggest year-over-year jump in inventory since 2019. Now, that finally is giving buyers some options. And we all know as buyers had a really rough go through 2020, 2021, even 2022. So this is a welcome shift as we see things loosen up with more homes coming on the market. And here's something curious. The market isn't just divided into two segments. It's like complex tapestry with different threads telling different stories. In fact, if you caught my previous video about Healdsburg's market, you would know exactly what I'm talking about. Let me break it down for you. When we look at the general market, we see a clear division between home types and their sales performances. And trust me, it's more interesting than you think it might be. Homes under $2 million, they're showing real resilience. We saw a 3.6% increase in sales volume, with days on market increasing by 10.6%, but still under 60 days. Inventory for these homes surged 60.4%, creating more opportunities for buyers while still maintaining a predictable selling environment. Now, the luxury market, on the other hand, being over $2 million, that's a different story entirely. Sales volume actually declined of 1.8%, with days on market increasing almost 20% and sitting over 90 days now. It's almost twice as long as properties under $2 million. The luxury home market inventory skyrocketed 120% almost, and it really characterizes how you have to have something really unique in the luxury market to sell for near at your asking price and quickly. But location isn't just a footnote here in having a marketable property. Properties near amenities showed much stronger pricing and faster sales also. Rural properties became more price sensitive, with extra challenges like insurance costs coming into play. Turnkey homes, now they significantly outperform properties needing updates. Before we dive deeper, please take a moment to subscribe to my channel to get new videos with everything you need to know about living in Healdsburg and Sonoma County in general. We release new videos every week with local insights that can save you from making big mistakes in this market. All right, now that we've unpacked 2024, let's look ahead to 2025. And I've got to tell you, we're cautiously optimistic about what's coming. First off, the sub $2 million market is expected to continue its outperformance of the higher end market. We're looking at an inventory supply of under 3 months, which might sound pretty low, but it's a massive improvement over the 0.8 months of inventory under 2 million that we saw during the peak of COVID in 2021. For context, real estate experts consider 3 months of inventory a balanced market. So we're getting closer to that sweet spot while still favoring sellers slightly. Here's what really gets me excited though. We're predicting a strong outlook for turnkey properties in prime locations. We're seeing growing demand still from second home buyers and especially from downsizers who are looking for that perfect move-in ready home. And with improved interest rates on the horizon, knock on wood, we expect continued price appreciation, especially as things get more competitive as we head into spring, summer and Q2. Now, the luxury market over 2 million, that's a different story. We're expecting this segment to continue to underperform, shifting more towards a buyer's market. Inventory in this segment is projected to hit a high of 11 months. Now, that sounds like a lot of inventory, and it is compared to the 2 months. And just to put in perspective, we only had 3 months of inventory in the luxury market during the peak of the pandemic. So 11 months is a dramatic increase and is contributing to these lower prices and more time on market. Again, I have to reiterate how critical location is going to be, and I mean critical. The cost of insurance is becoming a material concern for all buyers, including luxury buyers. Buyers are going to be looking for those unique offerings, properties with incredible views, backing onto open space, or something special that cannot be necessarily replicated and really sets a home apart. Take a vineyard property, for example. Many are finding that these once prized assets and something that really drew people to Sonoma County are just becoming a bit of a liability at this point. They're not as much of a selling point anymore. The market is becoming more discerning as the vineyard industry struggles, and buyers want turnkey, low-maintenance luxury. They aren't looking for a palatial estate that's going to require a lot of updates and maintenance as they age. But here's the thing that really matters. Sonoma County continues to be an incredible place to live and invest despite all of this news. Our enduring appeal as a wine country destination, both in lifestyle and aesthetic, our moderate climate, and those strong fundamentals, particularly in our sub $2 million market, suggest that things are going to continue to be resilient here. While other markets have been on a roller coaster over the past 4 years, Sonoma County has steadily been rising without much of that volatility. While people may not get excited about a flat year, you have to remember where we've come from. We didn't have the peak and trough that a lot of markets did in 22 and 23. We've been relatively consistent. Now, that's the kind of stability that makes investors and homeowners all sleep well at night. As you can see, we're very excited about what we have to come in 2025. But wait until I tell you what this all means for buyers and sellers specifically. Now, how do you interpret all this, and what does it really mean for you, and how do you act? Now, for buyers, Q1 is looking like a golden window of opportunity. Inventory levels are still elevated, and the competition hasn't heated up yet to spring and summer levels, as buyers are just now starting to get back into the market in the new year. If you've been waiting on the sidelines, this might be your moment. The luxury segment in particular offers some serious negotiating leverage that we haven't seen for years, especially for those rural properties where it is a good fit for you to take on something with a little more maintenance or is a little further out of town, as long as you can stomach some concerns like insurance costs. With stock markets hitting record highs, real estate diversification could be incredibly timely. I'm seeing some fantastic value opportunities in the luxury segment, particularly for properties that need a little bit of love and a vision. But here's a pro tip: location is still everything. Proximity to town and amenities is still becoming an increasingly important issue, and I can't emphasize that enough. Now, for sellers, 2025 is looking very promising. If you own a turnkey property in a prime location, Q1 and Q2 could be optimal timing to sell. While we're looking at improved interest rates and increased inventory, creating healthy market conditions without the excessive competition seen by buyers, but still high demand if you have a home that is turnkey and ready to sell. But, and this is crucial, price positioning is everything in this market. As we see things stabilize, the market has become more price sensitive. Properties listed above market rates are sitting longer. Now, my advice: consider strategic updates to position your property as turnkey as possible. Truly make it irresistible, and you can not only price it higher, but it will move quicker. The strength of the stock market could support buyer confidence as well, particularly in the luxury segment as people look to shift assets around. But you've got to be smart about how you present that property of yours to really make it look like an attractive investment. Now, I want to be completely transparent. While things look promising, there are definitely some wild cards out there still for 2025 that could dramatically change our market. We're watching factors like potential tax cuts, interest rate movements, the stock market performance over 2025, and even local economic conditions like how our wine industry does in this next year. But here's what gives me confidence. Sonoma County has an enduring appeal. We are still the wine country destination with, as I mentioned, a moderate climate and really strong market fundamentals still. Properties properly positioned should continue to find ready buyers, regardless of the broader market conditions. While other markets have seen those dramatic ups and downs I mentioned over the past 4 years, we've been steadily rising without that volatility. That's the Sonoma County difference. This 2025 year could present a unique window of opportunity in Sonoma County's real estate market. Improved interest rates, increased inventory, and strong underlying demand suggest a more balanced market ahead, which can be a win for both buyers and sellers. Predictability is key. However, success will require careful attention to price positioning, property condition, location, and adaptation on what those market external factors do, related to rates and other policy changes that may come. You have to be adaptable and ready to pivot. Whether you're considering buying or selling, or just understanding more about these nuanced market dynamics, it'll be critical for you to stay informed in 2025 to make the best decisions you can. We'd welcome the opportunity to discuss these trends that might specifically impact your real estate plans and help you navigate what promises to be an interesting year in Sonoma County real estate. Whether you're considering buying or selling, understanding these nuanced market dynamics will be crucial for making informed decisions and wise decisions in 2025. We'd welcome the opportunity to discuss how these trends might specifically affect your real estate plans and help you navigate what promises to be another interesting year here in Sonoma County's real estate market. If you want to learn more about your specific situation, let's talk about how these trends might impact you specifically. Already eyeing a Sonoma County home? Give me a call, send me a text, or just shoot us an email at contact@brewingtonhargreaves.com or Jonathan, Jonathan, @brewingtonhargreaves.com, and let's see if I can help you out. Our team is one of the top real estate teams in Sonoma County, with nearly 70 families helped in 2024 alone, with $71 million worth of bought and sold real estate. With us, you get inside access to developers, homes not on the market yet, and lots of market insights. And hey, before you go, if you liked this video, you'll love our next video that's linked on the screen as well. So, hope to see you in the next one.